Good afternoon, everyone, and welcome to the Global Interdependence Center's Executive Briefing. I'm Bill Kennedy, your host, and this is the 8th edition of our Analyzing Pandemic series. And today we will explore the pandemic's impact on small businesses. As a reminder, this event is being recorded. Holly will present with slides and Peter without slides. The replay of this event and Holly's slides will be available on the website after today's call. And so you can find that on the GIC website later today. We have a lot of material to cover today, so out of respect for everyone's time, I will tell you about a couple of special offers and conduct our audience survey at the end of today's program. Let's go ahead and get to our speakers. Holly Wade is the Director of Research and Policy Analysis for the National Federation of Independent Businesses, the NFIB, based in Washington, D.C. Holly conducts original research and studies public policy effects on small businesses. She produces the NFIB's monthly Small Business Economic Trends survey and surveys on topics related to small business operations. She also serves on the board of directors of the National Association for Business Economics, otherwise known as NABE. Peter Boockvar is the Chief Investment Officer of Bleakley Advisory Group, a wealth management firm based in New Jersey. He's also the editor of the well-read Book Report, a macroeconomic and market newsletter. Prior to joining Bleakley, he held various portfolio manager, strategy, and research positions at the Lindsay Group, the New York-based hedge fund Omega Advisors, and Miller Tabak and Company. Peter graduated from George Washington University, and he is a CNBC contributor where he appears regularly. We're very fortunate and grateful to have these two excellent speakers join the GIC today. So Holly and Peter, welcome.
Thanks, Bill.
Holly, you drew the short straw, so that means you get to go first. So I'm going to now turn the screen over to you.
Wonderful. Thank you so much. It's great to be with everybody today from Northern Virginia. And I thought I would start off with looking at the latest edition of the Small Business Economic Trends Survey. It's a survey that we produce every month. We've been doing this for 46 years, started as a quarterly survey, transitioned to a monthly survey. And I thought looking at the April data would give a sense of kind of where small businesses are in a general state. And I'll also talk a bit about some interim surveys with our members that we've been doing over the last 2 months. So over the last 2 months, we have conducted more specific COVID-19 related surveys related to the 2 loan programs, but also what it looks like for small business owners in how they're trying to operate their business over the last 2 months, and how they're looking to reopen. So the headline measure of small business optimism is the index, our optimism index on the next slide. And over the last 2 months, we've seen a precipitous drop in the index, not surprising. So this isn't anything that we weren't expecting as states started closing down their economies, restricting business operations with non-essential businesses and also essential businesses to some extent, and the stay-at-home orders. Over the last 2 months, these are quarterly data, but over the last 2 months, we've seen about over a 13-point drop in the index itself. So looking at this slide, what we look for going forward is what does the scenario look like as businesses start to recover, when the economy starts to recover? Does it look like some scenario as it did in the second quarter of 1980 with a steep drop and a steep recovery? Or does it look something similar to the Great Recession, where we saw a pretty precipitous drop in sentiment and overall optimism, and a slow but steady build back up over the course of a few years? Looking at our surveys that we've conducted, again, of a random sample of NFIB members, we have roughly 300,000 small business owners across the country. To give it some perspective, about 3/4 of our members are classified as essential businesses, although some of those essential businesses do have business restrictions, but 3/4 are categorized as essential businesses in their state, and about 1/4 are categorized as non-essential businesses. So looking at what we found in these interim surveys as far as where small businesses think the economy is going forward, they're looking obviously for their states to start reopening the economy. They want to get back to business. About half of them say that they would like their state to reopen immediately, although gradually. And another 31% say that they would like their state to start reopening at least in the next 30 days. So they're looking to get back into business and to start increasing those business operations or reopen if they are temporarily closed. But they are optimistic, or are certainly realistic when it comes to how they think the economy is going to bounce back. So while there are some who, about 1/4 believe that the economy should improve to pre-crisis levels by December, which is certainly optimistic, which would look more like the V-shaped recovery in 1980. 40% more say that they believe the recovery will occur sometime in 2021. So another year and a half is their thought or timeline where they think that the economy will be back to pre-crisis levels. And then about 20% believe that it will take longer than that. So somewhere between 2022 and 2024, 19% say that they believe the economy will recover by then, and about 2% say sometime after 2024. So still yet to be determined. Obviously, this depends a lot on how we're able to produce and come up with a vaccine or therapies to help those who do get sick with COVID. But right now, this is kind of the initial thought of small business owners and what they're thinking this might look like going forward. With the next slide, these are the components to the index. 9 of the 10 components declined in April. And the bright spot in this was expected business conditions going forward for the next 6 months. So business conditions looking ahead for the next 6 months improved 24 points. So in March, it did decline. In April, it improved. So small business owners are anticipating their states reopening those economies and getting back to some level of business operations. The biggest decline was real sales expectations. Not surprising, we hit historic record lows with that component. And that's not surprising in that, again, with state business closures, that in the next 3 months, they are certainly expecting a decline in sales in that time period. But as states start opening up those economies, they're expecting conditions to improve. And now looking forward to the next slide. This is outlook for general business conditions. And this is, again, the 24-point improvement. We'll see where it goes from here if when states start opening up those economies, if consumer confidence comes back and returns. In these surveys, we've asked, what are your biggest concerns in reopening the economy and their states reopening? And one of their major concerns is, getting customers back into the economy and building consumer confidence. They're concerned about the health and safety of their employees and of customers. Along with that, they are also concerned about being able to stock up on those essential supplies that will allow them to increase business operations or reopen. That includes hand sanitizer and disposable face coverings. And so these are all the concerns kind of wrapped up in the health and managing health and safety of their customers and employees, and getting those customers back in the store to increase business operations. So looking to the next slide, real sales volumes expectations. Again, this is not surprising how this looks going forward. Will kind of be the test as things progress, but this hit historic lows, certainly as a result of those state business restrictions and stay-at-home orders. The next slide looks at actual sales changes, a little bit less dramatic over the past 6 months or 3 months ago compared to the prior 3 months, so quarter over quarter. And we certainly saw the decline starting last month or in March and moving through to April, that sales started to deteriorate in the small business sector. And then moving to the next slide with actual price increases, they were anticipating the decline in sales and started cutting prices to reduce those inventories and to keep customers as much as they could. So we saw many more small business owners reducing prices. We've certainly seen that across most sectors of the economy and with small businesses too. The next slide is planned and actual labor compensation changes. So in both categories, we've seen a decline in the percent of small business owners or fewer business owners increasing compensation. We had a very strong labor market going into this, and small business owners, along with most business owners, have suspended raises, suspended increasing compensation. The interesting part of this slide is what this will look like in the next few months. Most small business owners, when we've surveyed our members, which are the same population for this survey, for our monthly survey, but 80% of NFIB members have received or have applied for, and most have received, a payment or a Paychex Protection Program loan. So that PPP loan that is designed to support employment and also compensation has now started hitting the bank deposits of small business owners, and they're starting to use the loan funds within that 8-week forgiveness period. Most small business owners, when they're taking out the loan, they've said that they are using the loan. The vast majority are using the loan, the entire loan. They're anticipating having it all forgiven within that 8 weeks. That was the huge benefit of this program, is the ability to turn the loan into a grant. And so hopefully, as it is intended, this will support compensation and employment in the small business sector. What this looks like across the next few months will be interesting as they start using the loan proceeds for those purposes. And then what it looks like after small business owners, hopefully the economy will start moving forward to support them after this 8-week period. Most small business owners are within this 8-week period. They've received their loan. They're starting to use it. And in the next few months, we'll see the next few weeks, we'll see more and more small business owners looking to get those expenses forgiven and then phase out of that 8-week period. And so, we'll see what that effect looks like in future months of this survey. On the next slide, I'll quickly go through the rest of this. Unfilled job openings, obviously that declined too, but again, looking forward, what does this look like as far as those business owners who are supported by their loan, their PPP loan? So in May, June, July, this could improve a bit as they're looking to increase those positions that they've had to previously lay off to maximize forgiveness of that loan. So small business owners, when they take out the loan for maximizing forgiveness of those loan expenses, they need to rehire or get those full-time equivalent levels back up to pre-crisis levels. And so, this may look a bit different over the next few months, and but certainly we're seeing a deterioration in the unfilled job openings. And then the same with job creation plans. We saw a sharp decline in the net percent of those looking to increase on the next slide, job creation plans. But again, this is another area where we might see some improvements as business owners are using the PPP loan proceeds for business operations. And then finally, the final slide I have are planned capital outlays. Small business owners certainly scaling back on expenses, and this is one area that they have scaled back dramatically, our planned capital outlays over the next 6 months, and we are back down to levels that we have previously haven't seen since the Great Recession. The EIDL loan is the other targeted small business loan that allows for more expenses, more eligible expenses. The economic injury or the economic disaster injury loan. And so this might support a bit more activity on this front, but we'll see in the next month or so what this looks like. So I will stop there and thank you very much.
Great. Holly, thank you very much. Colleen, actually, if we could put the slides back up, I have a quick question for Holly before we transition out. You showed we were joking before we went live, all the slides look the same except for slide number 4. If we could go to slide number 4 for just a second. And this was the outlook for business conditions on slide 4. That one actually is showing an uptick. What do you think is driving that sentiment that caused that one small, brief green shoot view of optimism over the coming 6 months or so?
Exactly. So I think looking kind of in the longer term, small business owners are anticipating as their states reopen economies, lift those stay-at-home orders, lift the business restrictions on non-essential and also essential businesses, that there will be some improvement. So, how I read this is that, the next month will be the worst of their business conditions and how this economic crisis is impacting them, and it will start to improve. The level of improvement, that's still kind of to be determined, but it does appear that they're thinking that the next month or two will be the worst of it.
Okay, great. Thank you for that. So Holly, stick around. We're going to bring Peter on and then have you come back for the Q&A, but thank you very much for your prepared remarks. And so now we'll turn it over to Peter Boockvar.
So I decided not to have charts today because I think of all the charts that showed the decline in economic activity was very much self-inflicted, or pretty much all self-inflicted, as we decided to shut down in response to the virus, and that was our attempt to contain things. So an analogy that I like to give is that if I bang my head against the wall and I get a headache, I'm not wondering how I got the headache. I am really trying to figure out how long that headache is going to last. And I think that's an important distinction, and why it's very important from here on out to really analyze where the economy goes from here. To what extent do businesses reopen? To what extent does rehiring take place? If you're a restaurant with previously 20 people, are you bringing back all 20, or are you going to bring back 17? Well, 17 is most of the 20, but there's still 3 people that aren't back. And to what extent are consumers willing to go out? I think over the next couple months, that confidence will grow. I think mask wearing is going to be an important part of that, and I'm hoping that people can get comfortable with that. Now, obviously, if you're higher risk individual, you're going to be doing less of that. So let's just say you do go out. Well, how much are you going to spend? Are your spending habits going to be the same? I'm under the assumption that your spending habits probably won't be the same, because most people have been infected by this shutdown in some fashion, and not everyone is going to get their job back. Now, for those people that are unemployed, that have gotten benefits, they have been generous enough that do last through July, so there has been somewhat of a buffer. Now, we'll see whether after July they'll get re-extended or not. So it's very much a wait and see. I think that there's hope out there, and some of the May economic data that we've seen have started to improve, but that's because we're obviously assuming that anything is better than shut down, and reopening is certainly better than a close. So I think at some point when you get to July and August, that will sort of be a gut check for the economy. And that's when the economic data really starts to matter again, I believe, because outside of large gatherings, we're assuming by July, August, most of the economy will be open. And that, I think, will be an accurate measure of the state of things. Also, maybe we'll get some news on therapeutics, but I think it'll be a good state of things on not just the reopening, but how we in the US in particular are acclimating to this new world. When you look at the statistics out of Hong Kong, for example, which is obviously connected to China, which is the source of this virus, 4 people have died in Hong Kong in a city of 7 million. 4 people. If you shift to Taiwan, I don't have the exact number, less than 10 have died, because they remember SARS in 2003. They remember what that was like. So when they heard about this in January, they were immediately shifting to mask wearing. And while there were parts that were shut down, there were a lot that were not, restaurants that were still open, and maybe capacity was cut, things didn't close. And even in Seoul, South Korea, which South Korea had a major problem, at least in that city, many things didn't close either. So we have to get used to the distancing thing. We have to get used to wearing a mask. It has to be part of our wardrobe. And in fact, it's going to be the person not wearing a mask that's going to seem more funny looking than the person wearing a mask. But again, how this unfolds, how we adjust ourselves will certainly be the determining factor at the extent to which the economy is going to rebound. But we have to assume that this has been such a traumatic event that it's going to take years to get back to a GDP level that we were at in 2019, or for that matter, the first 2 months of 2020. So that is the key on the business. Concerns me, particularly would negatively impact small business relative to larger businesses, is the cost of doing business, or we can call it inflation. The cost of doing business is only going to go higher as companies adjust to this new COVID compliance world. Just as parts of the economy had to adjust, whether it was a building that walked into that had to increase its security in the lobby, or the number of metal detectors that all of a sudden came, or after the financial crisis 2008, 2009, all the compliance people that were hired by the big banks. I mean, I think JP Morgan has about 30 to 40,000 employees just doing compliance. So that's not necessarily a productive use, but it's a regulatory needed use, but that's a higher cost of doing business. So this time around, small businesses, and we take that small restaurant again, well, instead of sanitizing the restaurant once a day at the end of the night, they could be doing it 10 times a day. They could have someone at the front door opening and closing the door until they have to spend money to have sort of an electric front door opener. There's going to be potentially more people spread out in the kitchen, which could slow productivity. Sourcing food from suppliers could be difficult, and then you may have to pay higher prices for that. You go to the supermarket and you've seen a jump in certain prices, particularly meat, because of supply disruptions in a lot of the facilities. Imagine, let's take the airline industry, for example. The demand for flying is going to take time to get back to where it was, but I think it could rebound quicker than the ability of airlines to supply capacity to the market. So you could see full flights again, and that's not because, well, business is booming, but that's because airlines have taken off capacity so many airplanes. I read an article the other day that the price of cargo shipping containers are up 25 to up to 40% because so much capacity has been taken online. So if this were to be the case, this is going to particularly affect small businesses. And the question is that a cost that they're going to be able to eat, or they're going to be able to pass it on to the rest of us? Also look at the cost of labor. So there'll be some jobs that people aren't going to be rushing back to because they're scared or they're fearful for their safety. Until they get comfortable for that safety, maybe that employer is going to have to spend more money to bring that employee back to work. And I mentioned earlier about unemployment benefits. In some states, it's $1,000 a week. On a 40-hour work week, that's $25 an hour. And you can imagine that a lot of these people prior to COVID were maybe making $15 an hour or $20 an hour. So is repeating that going to be enough to have them give up $25 an hour through July? Or is that employer going to have to spend more money for labor, which obviously more negatively impacts smaller businesses than larger companies? So that's another thing, another challenge that a lot of small businesses are going to have to face. Holly mentioned the PPP program, and I do believe that the SBA and the Treasury is going to relax a lot of the rules, whereas right now 75% of the money has to be spent on employees. There's some businesses where the cost of labor isn't that high, and maybe rent or utilities or insurance or maintenance make up a bigger percentage of their cost structure. I do think that they're going to get some relief. So I think that so any businesses out there that are worried about these restrictions, I'm hoping within the next couple of weeks, there's going to be some more clarity on how you can allocate that money, which also a lot of small businesses obviously are paying rent. How do they handle dealing with landlords? I do think that landlords have no choice but to work with their tenants, particularly small businesses. Now, a large company, well, that landlord could expect to get paid. Now, I know some big companies are playing hardball with landlords, and hopefully that can get some resolve. But it's the small business that lost a chunk of their business. It's going to take time to, because remember that rent agreement was set when business was here. Now business is here. Can they still pay that prior level of rent? So I'm hoping for smaller businesses, landlords can be much more accommodating. Now also, I think that businesses of all shapes and sizes, particularly smaller ones, in order to offset these price increases on their own business, and assuming that they can't fully offset it on the back end to the consumers, they're going to try to do more with less. And if you're a small restaurant, maybe you bring in some sort of robotic in the kitchen or certain things. That means less hiring, but it's a capital spend that you need to come up with. Over time, it should make your business more efficient, but it's another area of a cost that you certainly were not foreseeing. So I think it's going to be really key for businesses to manage a lot of these things. I think they're going to be also very dependent on banks to bridge them, and not just talking about the PPP, but I'm talking about relationships with banks that can help them get through this time, because a lot of this is buying time to get to the other side being where, again, there's an effective therapeutic or some sort of vaccine, hopefully by the early part of next year. And that gets into interest rates and the cost of funding and the cost of borrowing. And one of the things that we've seen is this bifurcation. We know that big companies can borrow pretty cheaply. when you look at the Federal Reserve is now involved in the investment grade corporate bond market, much less so in high yield, even though they've tiptoed their way into high yield. But there's going to be a huge portion of the bond market that is going to be paying a higher cost of capital. So you may look at the U.S. 10-year Treasury yielding 67 basis points, but that doesn't mean that that's the cost of capital for corporate America. And if you're a small business where you have obviously no chance of tapping into the capital markets, you're going to be relying on your bank. And it's really going to be imperative to develop and reinforce, whether it's existing relationships or creating new ones, to get access. And then, of course, tapping investors, because we know there's going to be a period of time when businesses will either be continuing to burn cash or at best be break even, because most restaurants, to use that as an example of another small business, they're not going to make it at 25% capacity. And many, unless they have a vibrant takeout and delivery business, may not make it at 50%. They're going to need at least 75%. So there's a lot to juggle here. And I guess the bottom line to all this is that this is going to take time to recover from. This is going to take years to put a number on it. And small businesses obviously have more of a challenge, and those with the better balance sheets are going to be better off. And many businesses, listen, they were only able to make payroll and have some money come out for that small business. But I do think that there is going to be an inclination to save more, spend less, improve the balance sheet, do more with less in terms of employees, and see what they can get away with in terms of raising prices onto the consumer in order to get to the other side. And I'll pass it on to Bill now that I see you.
Great. Peter, thank you very much for your prepared remarks. So we're going to move to the Q&A session. And as usual, we do not have a shy GIC audience. So we've got a lot of questions coming in for both of you. As a reminder, if you would like to ask a question, on the right-hand side of the GoTo page, there's a dashboard. Just go to the tab titled Questions, and you can type in the question, and that will get it into the queue. We're going to wait just a second to get a couple more questions in, but while we're doing that, Holly, there was one question for you, just a point of clarification. You made a comment about roughly, I think you said 80 or 85% of a group was participating in PPP. Can you just clarify what that was again? Sorry, Holly, I think you're muted. We'll need to get your mic back on.
Okay.
There we go.
There we go.
Thank you.
So it's 80% of respondents were NFIB members. So 80% of our membership have taken out a PPP loan. And just to, on your point, Peter, about financial assistance going forward for small business owners, when we asked those business owners who have taken out a PPP loan or an EIDL loan or both, whether they thought they'd need financial assistance going forward, in the next 12 months outside of those two loans, about a quarter of them said yes, that they would need additional financial assistance most likely, and 54% said that they didn't know. Only 20% said no, they didn't think they would need any more financial support. So this is going to be a long slog for many of them.
Okay, fantastic. All right. This question is going to go to both of you. Peter, we'll start with you, and then we'll let Holly take a crack at it. If states do not reopen until the end of June, and I think that would be a full reopening. Many states, or most states, I think, have already moved into phase one. But some economists believe June would be the breaking point if the economy does not reopen by then. Do you want to just comment on that in terms of that June timeframe, Peter? Peter, are you there?
I mean, I have to agree. All 50 states are open in some fashion, but I have to agree that every day, every week that goes by, small businesses are getting hurt even further here. So waiting another 2 weeks, another 4 weeks, I think would really be a disaster and put a lot of small businesses at a disadvantage for bigger businesses. I mean, it doesn't make sense to me that you can go to the supermarket, you can go to a Walmart with the craziness and the busyness there, but you can't go into the local clothing shop that at most maybe has 3 people in at a time. So I don't think there's a lot of consistency with the decision making about what can be open and what can reopen. But there's certainly the states that are being really strict with this, and I get all the health implications here, but I think that can be dealt with by mask wearing. And a lot of small businesses are out of favor. I mean, I can go to Walmart and buy my son summer clothes. I don't need to wait until the local clothing store reopens. So the state that I'm in, New Jersey, is just doing more damage to the smaller businesses by waiting until that reopens. I can go to now a bike shop, but they won't let me get my hair cut. So I think that these states need to understand the importance of wearing masks, look around to other states that have had success in this reopening, and understand that every day, every week that goes by, there's a higher chance that business is not going to be able to reopen.
Holly, do you have a view on the June timeframe?
Yes, no, I think, well, when we first started asking our members about how long that they could last without financial assistance, this was before they received the PPP loan or the EIDL loan for the most part, how long that they could last, the vast majority of them said less than 2 months. And now that they have some support with the PPP loan and EIDL, you know, that could take them into June, but they're hanging on through this financial assistance program on their own. Every day is going to be a challenge for them to keep the doors open, keep staff employed. You know, they have a bit of competition with the UI, supplemental insurance or payments. About 18% said that they have had a former employee decline a job offer because they are on UI. As Peter mentioned, you know, there are a number of them who had to increase their pay to attract people back into those positions so they could maximize forgiveness for the PPP loan. But you know, the longer they extend the stay-at-home and business restrictions, the worse it will be for small businesses.
Okay, great, thank you. Staying with the topic of PPP, will there be another round? And that's a question for both of you. So maybe Holly, do you want to take that first? Another round of PPP, what's the likelihood?
Sure. So right now there's over $100 billion still left in the program. Most of those who were interested in a loan have applied for the loan, and you know, as I mentioned, they're within that 8-week time frame. So if they extend the program beyond June 30th, which there is some discussion and support for doing that, maybe till the end of the year. And if they broaden some of the parameters, the 75% payroll rule, or open it up to some broader expenses that they're able to use the funds for, I think that will be more of interest to more small business owners. And so more of those folks will start applying for one of these loans. Hopefully if they do that and there's more support, you know, there'll be another round of funding. But thankfully right now there is still money in the pot for new applicants who are interested to participate in the program.
Peter, do you have a view on second round?
So I agree with Holly. I think they'll at least initially do more liberalization of the existing program before they start adding more money. I mean, I think that there probably is going to be more money needed. Treasury Secretary Mnuchin said today and hinted at there's going to be the need for more stimulus, if you want to call it that. But I think at least in the short term, because there's still money left, that we need to open up the program more to those businesses where the 75% labor cost criteria doesn't necessarily apply. And I'm hoping that takes place pretty soon because businesses are desperate for some clarity.
Okay, great, thank you. There's a question regarding the high correlation between unfilled job openings and the rate of change in the S&P 500. And so I think the implication there, one of Holly's charts was diving, but we've seen the S&P 500 do a bit of a V recovery over the last couple of months. So Peter, from your perspective, can you talk about what's already priced or discounted in the market based on what you've heard here today from Holly? And could you talk a little bit, tying that together, about small cap investing versus large cap investing?
Well, with the S&P 500 around the 2950 level, remember what last October was like. We were at about 2900, 2950 when the unemployment rate was 3.5%. I guess we can call that the good old days right now, and compared to where we stand now. So there is quite a different macro overlay and background to that. I do think that the stock market right now is more focused on the direction of the recovery, which is obviously up as you reopen things, rather than the degree of that recovery. If you look at the 10-year Treasury yield of 67 basis points, that obviously is not a pound the table endorsement for a V-shaped economic recovery. At some point, I think there's going to be a gut check for the stock market, maybe when everything is reopened, that we're going to have to look around and say, okay, so this is the state of things. This is going to be a long slog before earnings get back to where they were in 2019, and I may want to pay a lower PE multiple than that. So I think that we're at the upper end of what's establishing to be our trading range here, and I think gains in the short term are going to be tougher to come by in light of what I just said. I think in terms of small caps versus large caps, it's really tricky. I mean, everyone's piled into large caps, so it's overcrowded, particularly technology, which makes up about 25% of the S&P, with the top 5 names 20% of the S&P. So the Russell 2000, to use that as a proxy for small caps, has dramatically underperformed. So then that gets into, well, does that mean that that is a setup for an eventual outperformance? And I think yes, at some point, but I'm just not so sure just yet, because it's the smaller companies that have the lesser balance sheets, the lesser capitalized and more debt, and they're going to have to get through this sharp economic downturn before they can see the light at the end of the tunnel. So I still expect maybe underperformance, but once we start getting out of this and to the other side, I think you have the potential setup for a sharp outperformance of small caps relative to large caps.
Great. So Peter just said something about the balance sheet quality of the small cap universe. There are 3 questions in the queue. They're all generally the same. They are addressing the interdependencies between small companies in America, the banks and financial institutions that support them, and the Federal Reserve System and the liquidity that's sloshing around in the system right now. So, Holly, let me ask you first 2 questions. Number one, do you have any line of sight into the health, the credit quality and credit health of small businesses in America? And the second question, any anecdotal evidence about the process of getting a PPP loan from their local institution? Can you take those 2?
Sure. So the process of getting one of the PPP loans, it was difficult. There were a lot of challenges at the beginning of the program. They were certainly trying to get many dollars out the door as quickly as possible. And there were a few roadblocks, but as there were more lenders that were approved for facilitating these loans, the more opportunities there were for small business owners to apply and receive approval for a PPP loan. So now the process seems to be fairly seamless and without many obstacles, as we experienced at the beginning of the program, the very beginning of April or the early April time frame. as this economic crisis continues, certainly the balance sheets of small business owners will deteriorate for many, and might be challenging to access financial assistance going forward. That's why it's so important with the EIDL and the PPP loan, that they were fairly favorable, they're very favorable for small business owners receiving those loans. So I think the EIDL loan, they were looking at a credit score for approval, and that was about it. For the PPP loan, it was a lot of self-certifications that they needed the loan, and there wasn't much background as far as looking at the financial stability of these businesses. I mean, the whole point of the program was to make sure that they had some financial support to get through this crisis, knowing that this was going to be a challenge for many small business owners because of limited business activity, whether it was, as Peter said, kind of self-inflicted through state restrictions, or just lower consumer confidence of going back out into the world and spending money. So going forward, I think that small businesses are going to need those favorable terms still, because they are going to have a hard time keeping the bills paid and keeping employees on staff and being able to manage at much lower economic activity, kind of for the foreseeable future. It's a big unknown. It's like looking into the abyss, unfortunately. And so there's a lot of uncertainty. They don't know, how this will unravel or progress. And so they're limiting spending, but they're looking to open the doors as much as possible, but they're going to need most likely a lot more help to do it.
Okay. And Peter, to you, with the liquidity that's been coming into the system, is that going to make its way to Main Street? Is it going to be just helping out the banks? And do you have a view with regard to the shadow banking system and how the liquidity may or may not support venture funds, private equity funds, and the like?
Well, one of the key Fed programs is this Main Street lending program, with the hope that their capital, with the help of the Treasury, is going to make it to these small businesses. So a bank would lend money to a small business and would be able to sell 95% of that loan to the Fed, keeping 5% on their books is a general ratio that is being employed. So the Fed is going to be taking on a lot of risky loans, but it is the way for the Fed, which was accused of bailing out the big banks in 2008, to now helping Main Street. And the name of the program is on purpose to call it the mainstream lending program. So hopefully that is a large pool of capital that will get its way in the hands of a lot of small businesses. Now, I'm not completely up to speed of what sort of collateral that might be needed to back those loans, whether it's a personal guarantee or it's a piece of real estate or whatever it is. So I do think that there's more details that need to be gotten from the program, but that's their way of getting in. Now, in terms of the shadow side is going to be important here, because there'll be some banks that aren't going to be that willing to lend, and there's going to be a lot of particularly middle market finance that's going to be needed to be done to get capital to a lot of businesses, and that's going to be done through sort of the shadow banking side, whether it's business development companies or private equity or different credit facilities of different funds or so on. So it's going to be a combination of these things that is going to be tapped in order to provide capital to these different businesses.
Great, thank you. Thank you for that. Holly, I think you said that there's still quite a bit of, I think you said $100 billion in the pot from the original PPP program. If a firm didn't try to or did not apply early on, and maybe either they didn't think they needed it or maybe their bank wasn't ready to process it. Any reason why they couldn't apply now if the bank is ready to process it?
No, absolutely. If there are businesses out there that this program would help them financially support their business operations, and they think they could take advantage of it. Again, the terms and conditions are what they are at the moment. We hope that they're more flexible going forward, but absolutely small business owners should apply. They should talk to their bank to see if they're participating in the program, or look for other banks. We've heard from small business owners who have talked to their banks and they're not accepting applications anymore. But there are still many banks out there who are accepting applications, and the Treasury has a portal where you can look up to see what banks are participating in the program. And then there are a number of online lenders that are also participating in the program and accepting new applications. So definitely, if there are businesses out there that are still interested in taking out a loan, a PPP loan, they should talk to their bank. The program is open until June 30th as it stands now.
Great, thank you for that. Peter, a question for you. What's the implication of oil being below $30 a barrel? How does that impact either your asset allocation or the segments of the market that you're looking at?
So I'm actually bullish on oil, and I got that way when we saw negative prices in the May futures contract, because I felt that is what bottoms are made of. It's going to take time to have demand pick up, but it is picking up as more businesses reopen and people hit the road again, particularly going into the summer, where a lot of leisure travel is going to take place in cars and trucks, and certainly much less so in planes. On the supply side, you can assume that a lot of oil companies are not making money at $30 a barrel, particularly shale in the U.S. And that short shut-in and cut in production that we're seeing there and other parts of the world, I think is actually setting us up for a rally that would surprise people to the upside. And we have to go back that deep water oil production slowed down after the collapse in 2014. So we're still dealing with sort of an under production drilling story since 2014's oil collapse that is now being, or 2014 into 2016, that is now being exaggerated by a sharp decline in shale. Shale has obviously been a major producer of oil over the last bunch of years that made the U.S. A dominant global player all of a sudden. But that business right now is not really going to come back to life until oil prices on a sustainable basis are probably closer to $45, $50, which I think is a possibility that we get there sometime in the back half of this year or into next year. So I do think some of the large mega cap oil companies do look attractive here.
Okay. So there's, Holly, just a follow-up question. In your membership of 300,000 businesses, is there much oil and gas participation in the NFIB?
No, not of our membership. So most of our members are in kind of 4 large buckets: services, retail, which includes restaurants, construction, and manufacturing.
Okay, thank you for that. So a question for both of you. Holly, you can take this one first. What's your outlook with regard to bankruptcies over the next 6, 12, 24 months?
Sure. So this is one question that we've received a lot. Right now, there's a fine line between temporarily closed and permanently closed. So most small business owners that are temporarily closed at the moment or are operating at significantly reduced levels, I think are optimistic that when their states reopen, that business activity will improve. How much that improves will then determine how long they will be able to survive. Certainly, we're going to see a sharp increase in the number of businesses closing permanently, unfortunately, but hopefully the support of some of these loan programs will support more small business owners that might not otherwise make it to the other side of the crisis. But right now it is, as I said, it's a fine line between those that are temporarily closed and those who might be permanently closed, in the next 6 to 12 months.
And Peter, your view on bankruptcies?
I mean, it's unfortunately going to be a rising trend over the next 6 to, well, I don't want to go out 12 months because hopefully we have a vaccine by then, but over the next 6 months. And it's unfortunate. This is going to be a painful experience for many small businesses and those that have funded them. And I don't see how they don't continue to rise.
Okay. Well, unfortunately, we've run out of time. That'll be the end of our questions. If we did not get to your question, hopefully we can follow up with you directly. But Holly and Peter, I want to thank you for very timely insights and for spending time with our GIC community. This was really great, so thank you. Audience, let me close with 3 quick things. First, upcoming programs. So 1 week from today, May 28th, in conjunction with the GIC's College of Central Bankers, we'll be hosting a monetary policy discussion with 2 very special guests. We'll have Dennis Lockhart, the former president of the Atlanta Fed and a fellow of the College of Central Bankers, and we'll also have Dave Altig, who is the director of research at the Atlanta Fed. Then on June 4th, the following week, we will have Dr. Jeffrey Gold, MD, who heads the University of Nebraska Medical Center. Dr. Gold will be making his second appearance on the executive briefing to update us on the scientific and healthcare developments in the fight against COVID-19. So you get a little monetary policy, you get a little healthcare policy back to back over the next 2 Thursdays. We hope you will join us. Second, the GIC's asked me to mention 2 special offers. So first, for a limited time, the GIC is offering a 10% discount for all new members. Second, to keep this executive briefing series available to the general public, one of our GIC members has established a very generous matching donation challenge. So through July, your generous donation of $25 or $250 or $2,500, whatever amount you might give, will double in value and impact through this dollar-for-dollar match. Your donation and the match will go directly towards bringing high quality economic, healthcare, and market content through the remainder of the year. And so if you'd like to learn about membership or how to make a donation and participate in the matching donation process, go to the GIC website. That's at www.interdependence.org. Lastly, Interdependence is our middle name, and we're keenly focused on both the positive and negative interdependencies related to this global pandemic. Your feedback to our surveys is very important. It's a part of our own research into how interdependencies are shifting. And so as we conclude today, I would encourage you to take 60 seconds. Please respond to our audience survey. There are 2 questions regarding interdependencies. There are 3 quick questions on how we can improve programming to make this series more impactful. If you'll just take a few minutes to fill that out, that would be greatly appreciated. So your feedback's important to us. We thank you for your attention today, and good afternoon.